Hello investors and future investors, welcome to the channel. In today's video, I will give you 3 criteria that you can use as a beginner to help your decision as an options trader. So if you're new to the channel, thanks for stopping by. On this channel, we help you with option strategies that can give you consistent revenue and everything related to finance and investments. And yes, you too can make money from your living room with options trading, and I'll show you how. And all I ask in return for this free content is an early thumbs up by you hitting the like button, and consider subscribing for more ways to win with options. Welcome to Investment Gains. Let's jump right into it. So I want to say welcome to all the new viewers and welcome back our returning viewers and subscribers. We are so close to 1,000 subscribers, and once we hit that milestone, we will be doing live weekly trades with my portfolio. So please help support the channel by sharing this video and leaving a comment below. Today's video is going to be a bit different. I will show you 3 basic criteria I use before making a decision as to which strike price to use to sell an option. Now the emphasis is on sell. So if you do not know, on this channel all we do is sell weekly options in order to generate weekly revenue. So as a new trader of options, you're not going to be familiar with the Fibonacci charts, the RSI, candlestick patterns, or stock retracements. Don't get me wrong, all of these technical indicators are good, but as a new trader, they can be very overwhelming and have you decide to quit even before you get started. If you have no idea about the technical analysis, the terms I just mentioned, then keep watching. Now, the 3 basic criteria I'm going to give you, if you understand them, the bonus criteria that I'm going to give you at the end of this video will make you an options master. You know how we do it. Let's dive right in. So criteria number 1 is going to be scrolling through the graph, the weekly, the monthly, the quarterly. So in order to show you this, let's start with Blink Charging, ticker BLNK. Okay, so here we are on Blink Charging, and what we're going to do, we're going to go into the options chain in order for us to choose a strike price. We're going to be pretending to sell a covered call. So let's go ahead into trade Blink options. We're going to go to sell and call, and we're going to choose the expiration date. Let's go December 23rd. Now we're going to choose our strike price just slightly above the current share price. Now let's go with a $32 strike price. Now that I have the $32 strike price, now I'm going to do some basic technical analysis to see if that's a good price. So we're going to go back to the Blink graph, and now we're going to scroll the weekly. Now, what we're looking for the last time that the stock actually hit the $32 mark. Now, if you go ahead, you can see the stock actually hit the $32 strike price on December 8th. That is actually less than a week ago. So right off the bat, you don't really need to go to the monthly and the quarterly. The weekly chart is telling you that the $32 strike price is not a good price in order to sell a covered call. Hopefully you understand that. Good. Criteria number 2 is checking the trading volume before making a decision of which strike price to choose. So we're on Blink, so let's just continue with Blink. So we're going to scroll all the way down and we're going to look for the average volume. So as you can see here, the average volume for Blink is about 2 million. Now 2 million is pretty decent, but it's not very liquid. Now let me show you what I mean. Now Blink is involved with EV charging. So let's go to its competitor, ChargePoint, ticker CHPT. Okay, so here we are on ChargePoint, and let's scroll down now to see the daily volume. So here you go. The daily volume is going to be around 10 million. So in your opinion, which one do you think it's easier to get in and out of an option contract? The one that trades 10 million on average, or the one that trades 2 million? Good. I think we could come to the consensus that the one trading 10 million is going to be a lot easier in order to trade options. Now let's go to criteria number 3. Criteria number 3 is going to be the chance of profitability. Now we're on ChargePoint, so we're going to continue using ChargePoint. Let's go to trade ChargePoint options, and once again we're going to pretend we're going to be selling a covered call. So let's go to sell and call, and let's choose the same strike date of December 17th. Now let's look at the strike prices right above the share price. Now smack in the center, you could see this column here that says chance of profitability. when choosing your strike price, I would definitely consider my chance of profitability before making a final decision of which strike price to choose. Now, if you're familiar with this channel at all, you know that all our chance of profitability is always 75% chance or higher, which gives us a better chance of winning the trade. Now, if you are new to option, my suggestion would be to choose a 90% chance or higher. Now, with the 90% chance or higher, what you're gonna get a much lower premium. However, your chance of winning the trade is way better. As you build confidence, as you build momentum, and as you start building your portfolio, then you could go down and then start choosing lower chance of profitability, which is gonna give you a lot higher and better premiums. Good. So when doing your due diligence as a new option trader, you don't know any charts, you don't know patterns, these are 3 criteria that you want to use. You need to scroll through your weekly, your monthly, and your quarterly to see when is the last time the stock that you're considering actually hit that strike price. The second criteria you should be using is going to be the trading volume. The more volume that the stock has, the easier it is to enter and exit the option. The third one is going to be your chance of profitability. The higher your chance of profitability, the better it is in order for you to build your portfolio over time, nice and slow. And as you gain confidence, then you could reduce your chance of profitability in order to make higher premiums. Now that you've stuck around for so long, I will give you the bonus criteria that must be used in order for you to master options trading. That bonus criteria is going to be learning the Greeks. Now, in order for you to learn the Greeks, let's go into the strike price. Now, here you go. Now, as a new option trader, this here would be your Greeks. So as an option trader, there's 3 criteria you also look for inside of the Greeks. Criteria number 1 would be the volume to open interest. Criteria number 2 is going to be the implied volatility. And criteria number 3 is going to be the delta. Now, if you're able to master the Greeks, trust me when I say you will become an options master. Now, we have lots of strategies like this on this channel. So if you want to join the weekly income team, like and subscribe right now. Also, hit the notification bell below to get an alert when I post a video. But most importantly, please share this video with someone you think that can benefit from its content. Let's help as many as we can. Thanks for watching, and remember, always keep pushing your investments.